Today is April 3rd, 2023. I haven't made a video over the market in some time, so in about a week. So I wanted to come out and talk a little bit about, where we was at the last time I made a video. In that video, I was pretty bearish. The banks, we was going into another weekend, last weekend and we didn't know what was going to happen with the banks. But last weekend there was no noise. So last week, it was the market was up. It was a pretty quiet week. Everything was pretty calm. We did get the PCI report, which came in about where it was expected, so it was no surprises to the upside or no surprises to the downside. But it still showed that we still have quite a bit of inflation. We're nowhere near the Federal Reserve's 2%, which means the Federal Reserve might have to continuously raising interest rates. But one thing that did happen, happened yesterday, OPEC Plus, which OPEC Plus is OPEC including Russia. They decided to cut oil by 1.1 million barrels a day. And that was already from the beginning of the year cutting 2 million barrels a day. And what does that have to do with me as an individual? One, as you know, as oil prices go up, which it jumped today quite a bit. I want to say up $4 to like $80 a barrel. So not only have you going to pay, you might have to pay more price at the pump, which will affect you individually, but you can also look at how is that going to affect future investment opportunities that I have. Oil is across our economy, everywhere in our economy. Factories use oil, natural gas. So basically it's saying that it's inflationary if oil prices go up. So not only at the pump, but other people are paying it. You're paying more for your heating of your home. You're paying more for cooking. You're just paying more just across the board, which is inflationary, which may cause the Federal Reserve to keep having to raise interest rates. Also, at the end of this week, we're going to get a new jobs report. We see how that go. Obviously, if we add more jobs expected, if the wage continuously go up, those are inflationary pressures, which will cause the Fed to have to continuously raise rates. As you know from my last videos, we want to take advantage of opportunities. If the Fed keep taking interest rates, which will continuously affect the banks. You have to watch a past video to understand how that's going to affect the banks if them keep raising interest rates. But those may lead to opportunities. But one thing I did want to take an opportunity to talk about today is an investment mistake that I made in the past, and that you may learn from. So World Wrestling Entertainment got purchased today by the owner of the UFC. They got purchased for $9.1 billion. So I want to say over 10 years ago, but I looked at the 10-year chart. The 10-year chart, this was over 10 years ago, and it was selling below $8.56. But I'm just going to use $8 a share, even though I know it was less than that. When WWE had turned down, it was going through some negative. It was going through a negative time at the time. They were going through a little bit of trouble. I want to say they reported a loss, and I actually purchased some shares of WWE. I rode it for a little while. I kind of decided I didn't like it, even though I liked it for the long term. But I decided to make a really dumb financial decision, and I sold my WWE shares. And so back then, I'm just going to use $8 a share. So WWE was at $91 a share. I believe it opened the day at 56 because it was, even though they got merged and got bought for $9.1 billion, it was an all stock deal. So, and then the purchaser of WWE, their shares went down, which allowed for WWE shares to go down. And because everybody knew WWE was up for sale and Vince McMahon wanted over $9 billion, so a lot of that was already priced into the stock. So it's not a surprise that it was down. So I'm going to say, and over 10 years ago, let's say I put $8,000 at $8 a share, I put it in WWE. So today, just say in 10 years, today I could have sold my shares for $91 a share, which been in like a 10x. So if I'd have bought it over 10 years ago for $8,000 a share, I could have sold it today for $91,000 a share. Which over a 10-year investment, that's a really good return on investment, something that I would have accepted it was a good investment. But even at the time, what made it even worse and what made it a worse investment, at the time when I purchased it, one of the reasons why I liked it is the WWE was paying 48 cents a share dividend annually, 12-cent quarterly, which is the same dividend they got today. So they never lowered it, they never raised it, they kept it the same. So if I'd have kept that $8,000, and got my dividends, I would have gotten $480 a year for 10 years. So basically what I'm saying is I could have purchased it. I would have got, it was at the time, at $8 a share, at 48 cents, it was paying a 5.56% dividend. So even though I believed in the company, I could have bought the shares, got 5.56% dividend annually on my income. On my investment. So I would have been basically being paid to wait for WWE to turn around and be in the position that it is today. So not only that I was able to hold my shares and sell them at $91,000 today, or even $86,000 or $87,000 a day at where it's at, or I can hold it and hold the merged company and have UFC, the parent owner, is going to own 51%. WWE is going to own 49%. I can hold my shares and still have my investment. But I would have been paid to wait. And over the 10-year period, it would have been $5,800. So my investment would have been closer to $96,000 if I would have sold due to this deal. So those are some of the reasons when I talk about we just wait on the market. When there's bad times, we look for good companies to purchase, which at the time I believed in the long-term investment in the WWE. I believed there wasn't no reason for them to go away. I felt as though they was going to keep growing. They were going to get new TV deals. They were going to keep filling up stadiums. So it was a sound, good investment at the time that I decided not to be a long-term investor. And that was a major mistake that I made.